Your Credit Matters segment today being brought to you by CreditSanitizer.com. You have a credit report and it is wrong. What are you doing about it? Credit Sanitizer has these solutions for you. Can utility, rent, insurance, and other non-lending inquiries affect your FICO scores? A credit inquiry is a record of when an entity checked your credit report. From Equifax, Experian, and TransUnion, sometimes inquiries posted within the last 12 months can impact your FICO scores. Generally, this happens when there's an inquiry associated with an application for credit and the lender checks your credit report. But many types of non-traditional lending organizations may also want to check your credit, including phone carriers, insurance companies, utilities, employers, and landlords. Generally, the inquiries from these credit checks do not affect your FICO scores, but some of them might. To understand why, let's take a closer look at how credit inquiries are classified and which inquiries FICO scores consider. Hard inquiries versus soft credit inquiries. Credit inquiries can be thought of as either hard or soft inquiries. Both types of inquiries stay on the credit report for 2 years, and the distinction is important because soft inquiries are not considered by FICO scores, but hard inquiries posted in the last 12 months can affect FICO scores. Hard inquiries happen when an entity checks your credit for a lending purpose. When you make a request or apply for a new credit, this could happen if you apply for a loan or credit card, or when you ask your credit card company to increase your credit limit. A soft inquiry is generally the result of a credit check for non-lending purposes, such as when you check your own credit report. Soft inquiries also can happen without your permission, but only if the entity has a permissible purpose to request your credit report. For example, credit card issuers will often pre-screen your report and score to determine if they want to offer you a pre-approved offer of credit. Getting set up to pull credit bureau reports. Not just anybody can pull credit reports. Entities need to be reviewed and approved by the credit bureau before they can start accessing consumer credit reports. If the entity is approved to pull credit reports, the credit bureau assigns the organization a unique subscriber code or member number, which typically includes information regarding the entity's kind of business, like an auto lender, a credit card issuer, employment agency, etc., which can be used to help classify as soft or hard inquiry. For example, an inquiry for an employment background check would be a soft inquiry, while an inquiry to set up for a finance company would be a hard inquiry. Many lenders offer multiple types of credit, and they may be assigned multiple subscriber codes or member numbers. Which inquiries that never affect your FICO scores? Some credit checks always result in soft inquiries, including inquiries from, you can check your credit report or score. MyFICO.com is our go-to for that. A credit bureau uses your credit report to create a list of consumers for a creditor that wants to send pre-approved credit offers. I hate those. I'm sure you've got many calls about your extended auto warranty. Go to optoutprescreen.com, optoutprescreen.com, and do not call.gov. Do not call.gov. Both of those are services to get you off of these sales lists. A utility company checks your credit to determine your security deposit amount. An organization checks your credit for employment purposes. An insurance company in some states. Company checks your credit report when you apply for a new policy. These soft inquiries will never affect your FICO scores. They might not even appear in the credit reports that lenders receive when checking your credit. Focus on the most important factors. FICO scores only consider hard inquiries in certain circumstances, and even then, a single new hard inquiry will generally have a minor effect on your score, often a decrease of less than 5 points. New inquiries might be important if you're closely monitoring your credit before applying for a new loan, but using credit accounts, having a low utilization ratio, and making your payments on time at the right time will be most important. That would be go to rsrccpayment.com, rsrccpayment.com, and you can see when the right time is to make those credit card payments, rsrccpayment.com.